Welcome to Arnerich Massena's first quarter 2017 WebReport Market Update. Hi, I'm Arthur Coyne. Stocks got off to a great start in 2017 on rising corporate earnings, rising consumer confidence, and optimism for the new president's pro-growth agenda. Here we see in the first quarter's returns that emerging market stocks had their best performance in 5 years, rising 11.4%, followed by international stocks at 7.9%, and U.S. stocks at 6.1%. Meanwhile, demand for fixed income investments held firm and bonds performed as well as or slightly better than their yields would indicate. With the U.S. economy creating hundreds of thousands of jobs each month, initial jobless claims have fallen to a 43-year low, and demand for workers has caused wages to pick up slightly and grow at 2.8%. The improving job market, combined with low interest rates, helped lift consumer confidence to its highest level since December 2000. The economic growth has also been showing up in the Consumer Price Index, which over the past year has risen between 2 and 3% in both the United States and Europe. To keep inflation from running out of bounds, the Federal Reserve raised its short-term rate in March, its second consecutive quarterly move, while the European Central Bank, which historically tends to lag the Fed in making adjustments, remained very accommodative. This divergence in monetary policy can affect economic growth and exchange rates. The U.S. economy's higher interest rates and growth rates have been driving the dollar's exchange value higher relative to other currencies over the past few years. In December, the dollar reached a 14-year high, making U.S. exports more expensive and putting U.S. companies at a disadvantage in the global market. In the first quarter, the dollar declined slightly, but not enough to create a meaningful improvement in U.S. competitiveness. With the dollar near a 14-year high, there is concern that U.S. stocks may underperform international stocks. In this chart, we see that historically, a strong U.S. dollar has been a predictor of poor future U.S. stock relative performance. If this historical relationship were to hold in the future, we would see international stocks outperforming U.S. stocks over the next 5 years. At the end of the first quarter, our view of stability investments remained unchanged. However, in late January, we adjusted our view of growth investments to include an overweight to international equities in order to take advantage of what we believe are favorable valuation and currency conditions. We're also keeping in place our existing tilts towards value, small and mid companies, and sector themes such as healthcare, resource efficiency, and water. And we continue to favor private markets over public markets for investors who can use them. Your advisor will keep you informed as investment opportunities become available. Thank you for joining us this quarter. For more information, please see our website at arnerichmassena.com.